The MicroStrategy hit job we've been talking about might have been real. JPMorgan and Morgan Stanley just launched leveraged Bitcoin-backed products tied to BlackRock's IBIT. This is right after freezing MicroStrategy transfers and increasing margin requirements to 95%. You can't make this up. They didn't just compete with Saylor, they kneecapped them first. This timeline checks out, and it looks like a coordinated setup. We're gonna break it down today. This is Dante Cook with Bitcoin Simply. Let's go. All of the mainstream media FUD against MicroStrategy started in May, when famous hedge fund investor Jim Chanos came on TV talking about his short MicroStrategy trade.
Michael Saylor is a wonderful salesman, but that's what he is. He's a salesman. And what he's selling investors is the concept that you give me your money and I'm just going to go buy Bitcoin. And hopefully the value of my stock trades at a premium to the value of that Bitcoin. And so as long as I can keep doing that, I generate value. And this is, of course, I called it financial gibberish because on top of that, he also said in your interview, he said, the company should not just be valued on the basis of the Bitcoin holdings, but on a multiple of the profits that accrue from when I do this financial alchemy. And I pointed out on social media, I said, well, that's akin to saying, well, my house that rose in value from $450,000 to $500,000 last year is not worth $500,000. It's worth $1.5 million because it's worth the $500,000 plus a 20 multiple on the $50,000 increase. And of course, that's absurd. But that's the claim he's making. And let me just interject really importantly here. I'm actually doing what he is advocating, right? I am selling MicroStrategy securities to buy Bitcoin. Let's be clear, it's a hedge trade. I don't know where Bitcoin is going to go.
And it doesn't matter to you, actually.
Well, it doesn't matter. The premium compressing matters to me. It's important to understand that in 2024 and 2025, mostly at the end of 24 and 25, MicroStrategy has sold $35 billion, roughly, of securities, $33 billion in common and convertible into common, and $2 billion in preferred, most recently. The market for the preferred stock that he's selling is tiny relative to common. Let's be clear about that. And in his own words that you just played back, he makes a case that you have to be crazy to buy these preferreds, right? He's going to pay you a dividend, maybe. It's not redeemable. Mm-hmm. It's perpetual. And if I don't pay the dividends, they're not cumulative. I don't have to pay the back dividends. So, who in their right mind institutionally would buy these preferreds?
He called it a hedge. But what we know about big banks and their control of the media, we know that this was a market psyop in the beginning. Fast forward to July. Margin requirements on MicroStrategy increased from 50% to 95%. Fewer buyers, less liquidity, prices drop. And right when the pressure peaked behind closed doors on August 29th, JPMorgan launched a leveraged auto call IBIT product. They promised investors a 16% return if IBIT hits the preset price. They promise up to 1.5x gains by 2028. So while they're making MicroStrategy look risky, they're pitching their compliant, safe investment products that they're going to make fees on, whether it goes up or whether it goes down. On October 10th, MCI announces a consultation extension just 16 minutes before Trump's speech, causing a flash crash in MicroStrategy and Bitcoin. And what they said is they're deeming that these digital asset treasury companies as potentially risky and will need further consultation that they will announce later in January, causing the market to be spooked. 4 days later, Morgan Stanley rakes in over $100 million after the price crashes on their new leverage product. November 14th, JPMorgan officially files for their own. November 20th, they launched their own prospectus on this new product in detail. They launched their hit campaign on the potential MSTR delisting. That's not a coincidence, that's called choreography. Saylor knows this, and this is why he's been out campaigning digital credit and digital bonds for the last several months.
Everybody in the room is at the beginning, year one of the creation of digital credit, and you can go out there and brag. The most successful corporate bonds in the last 5 years are digital bonds. The most successful convertible bonds are digital bonds. The most successful preferred instruments are digital. When you put Bitcoin, when you put a collateral asset appreciating at 50% a year and even 30%, even if it's 20%, the truth is if Bitcoin only appreciated at the rate of the S&P, every single credit instrument built on top of it would outperform every other credit instrument because every other credit instrument I just named, the collateral underperforms the S&P. So we're on the verge of the creation of a digital credit market that right now it looks like 20, 30 billion a year. By the way, that's a throwaway. It's 30 billion a year and no one's noticed it exists yet. It's 30 billion a year. And the Wall Street Journal and the New York Times and Ford, they haven't noticed it exists yet. But we're about to go to 50 billion and 100 billion and 200 billion. And so think about $1 trillion of credit. And when it's $1 trillion of credit, it's not 1% of the credit in the world. And people still don't notice it exists. And so the real opportunity for all these companies is to issue billions, then tens of billions, then hundreds of billions of digital credit. And the reason that your equity is going to go to the moon is because the equity is going to be valued based upon the spread between the credit you're selling and the underlying asset you're buying. And you'll be able to capture that with massive amount of leverage. The more credit you issue, the faster the credit you issue, and the better the credit terms, the more valuable the equity is going to get.
He's promoting that they're the best company to sell structured products on top of Bitcoin as a collateralized asset. He also has been pushing back against the MSCI, saying that Strategy is not a fund, it's not a trust, it's not a holding company. They're a publicly traded operating company with $500 million software business and a unique treasury strategy that uses Bitcoin as productive capital. They've launched their own products representing $7.7 billion in value, saying that they're not a passive company or a holding company. And all of this is leading to this tweet where he's talking about Strategy Bank. What would it look like if a bank were managed by a Bitcoin company? This is the new battleground. If you zoom out and look at the larger picture, when you look at the buyers of US treasuries, China and Japan are now dumping their US treasuries historically to what they've owned. China's share of US treasuries is now 7.6% and Japan just 12.9%. And this means that the US banking system needs new collateral. Bitcoin and Bitcoin-backed products are becoming the lifeline. IBIT has already displayed this, generating more fees and revenue from their IBIT product than they have any other product of their 13,000 products that they have out there in the market. How many times can you say product in 7 seconds, Dante? They need to own it, and that's what Strategy is prepared for. That is what this whole Strategy Bank offering is about. Potentially. And JPMorgan, they're not just going to sit on the sidelines while this happens. They want Bitcoin as the prime asset to build products on top of. They want to join the same game without the same track record or backing as a company like Ledn, who's been doing this since 2018, allowing you to post Bitcoin as collateral and they will lend against it up to 50% loan to value. They've issued over $9 billion worth of loans to tens of thousands of customers and do this fast, simply, seamlessly, transparently, and in a way that provides trust. They've been one of the first digital lenders to do a proof of assets. You can actually look at the address of where your Bitcoin is when you post it as collateral. There's no credit checks and loans start at just 12.4%. You can repay them anytime at a lump sum amount. Go to learn.ledn.ao/simply to get started with 0.25% off of your first loan. One of the ways we can remove JPMorgan, central bankers, and the fiat industrial complex from the system overall is by removing our Bitcoin from exchanges. They can't create products on top of Bitcoin that isn't there. And it is going to be there if you leave it on the exchange or in the bank or in one of these products. You have to understand what's going to happen in the future. When they need to reclaim or recapitalize the system, well, they're going to do it with your Bitcoin, the capital created out of thin air that hasn't been a part of the fiat system. You will be the new monetization if you don't learn how to take custody of your Bitcoin. Schedule a free 30-minute consultation with the team at thebitcoinway.com/simplybitcoin so that this won't happen to you. They say it's all about volatility. They say that MicroStrategy was over-levered, but now we understand that they have been trying to monetize Bitcoin in now the $318 trillion bond market. This is a coordinated play to redirect capital and to have all of the inner workings of Bitcoin between IBIT and them on the inside. The game behind closed doors. The game that we can't see on the decentralized open source network. This is why Jerome Powell's speech on banks being able to offer crypto products was so important.
So our role with Bitcoin really is to look at, with crypto, really is to look at the banks. And we think it's, banks are perfectly able to serve crypto customers as long as they understand and can manage the risks, and it's safe and sound. A good number of our banks that we regulate and supervise do that. The threshold has been a little higher for banks engaging in crypto activities, and that's because they're so new. And we don't want to make the mistake. If you're making a choice to conduct that activity inside a bank, which is inside the federal safety net with deposit insurance, then you want to be pretty sure that that it's a safe and sound activity. So, we're not against innovation, and we certainly don't want to take actions that would cause banks to terminate customers who are perfectly legal.
Volatility will now be more part of a game with Bitcoin than it ever has before. John Kudinis, Calamos CEO, says that volatility is a feature and not a bug of Bitcoin, and it's here to stay.
Look, since 2012, there's been over 16 times that Bitcoin's gone down more than 30%, 19 times more than 20%, 33 times more than 10%. It's volatile. It's going to continue to be volatile. Might be a little bit less, but we've seen that right now. Having said that, it's here to stay. It's going up. That's why we've launched 100% protected, 90% protected, and 80% protected Bitcoin for people, given their risk appetite, to participate. And they've done really, really well, especially in the last drawdown. Since some of the stuff that we've launched, they performed really well versus this last 30% drawdown on Bitcoin.
The new frontier of Bitcoin is playing out in front of us. And are you going to be able to stomach the risk as these big institutions get in the game and try to manipulate Bitcoin and Bitcoin-focused products? You have to understand the difference between iBit and RealBit. Are you paying attention to the power moves happening behind the scenes? Are you stacking sats? One of the ways you can continually stack sats is by Bitcoin mining. You can earn sats straight to your wallet while you sleep, and do so with no middlemen, no markup, and in a carbon-free and 100% renewable energy-backed product, which is exactly what SAS Mining offers. You enter into an agreement with SAS Mining where they make money when you make money. They mine Bitcoin, you pay for energy costs, and the rest flows into your wallet as sats directly. Use the QR code on the screen to get started and always earn sats even while you sleep. This is Dante Cook with Bitcoin Simply. Happy stacking.